I really think you just need to, be along the equities market. To me, it's a very simple, straightforward play. I think owning physical gold is a very conservative with some good upside potential. I mean, gold could rally about 20-25% in the next few months, which for gold is a huge move. And to me, it's a low risk play with quite a bit of upside potential. So that's kind of where we're positioned right now is in those type of plays.
Gold has once again proven that it is the ultimate momentum asset. According to the latest data from the Commodity Futures Trading Commission, the precious metals rally to all-time highs above $2,200 an ounce in the futures market has been driven by unprecedented bullish speculative interest from hedge funds. The founder of Technical Traders Ltd, ChrisVermeulen, emphasizes the attractiveness of holding physical gold, citing its potential for a 20 to 25% rally shortly. The technical analysis reveals a strong upward trend across multiple time frames, creating favorable market conditions for gold. The price of gold has surged 7% in just over a week to hit record highs, leaving longtime market watchers struggling to explain what has been one of the yellow metal's most curious rallies. Drawing parallels to the market conditions pre-2008, Chris predicts a potential rally in precious metals, especially gold and silver miners. Concurrently, he anticipates substantial gains as investors flock to the precious metal space in the coming weeks. Gold prices soared from $600 per ounce in October 2007 to over $1,000 in March 2009, marking a 64% gain. Gold mining stocks, exemplified by the NYSE RK Gold Miners Index, experienced a remarkable 100% surge during the same time frame. Companies like Kinross Gold and Newmont Mining witnessed their share prices more than doubled. Gold mining stocks can provide leveraged exposure to gold while offering dividends and mining upside. Meanwhile, Chris attributes the recent resilience of gold to its inherent stability and allure as a deliberate, low-volatility investment. Now we present the clips of ChrisVermeulen's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think it's a multi-week, multi-month. I think this could be a nice push higher. I do think eventually we're going to see the stock market run out of steam, which you and I can talk about in a minute, but all the signs are there that the stock market's starting to run out of steam. And if the economy and the stock market starts to head down and we go into some type of recession or bear market, I think we're going to see gold pull back. But I do think gold metals are primed and ready to run for several weeks or a couple of months, and then it'll take a breather and a pause. But I do think we are in a super cycle for gold. I think it's going to rally overall if you were to look at the yearly chart or monthly charts for several years. But right now we're on a push higher, but I do think we'll have a fairly sharp correction probably later this year, which will probably be one of the last opportunities to kind of get gold before I think it goes into the multi-year rally, as you just mentioned, which I think is going to be very significant. You're looking in 3,000 plus for gold going forward. Gold break out and start a pretty big run based on technical analysis, going back different time frames. In the next stop for gold, if it can hold above 2,100 and hold its ground here, I think we're going about 2,300 is going to be the first stop. So I think we could see a multi-week run here to the upside. Looking at the bigger picture, stepping back actually shows gold running all the way potentially to 2,700. And this could happen in the window going maybe into May. So this is over the next few months, which is pretty exciting. We've been waiting for gold and the precious metal space to come to life. Gold has been holding up the best, simply, I think for a few different reasons. In my opinion, it's definitely a very solid, slow-moving investment. I think people like something that's not very volatile. They can put more money into it without it causing a lot of emotional stress. And people who buy gold tend to just hold it because it generally moves really slow. It's not something you flip right away. And investors in gold are the buy and hold more or less mentality. So gold has been holding its value, keeps going up. And from a technical standpoint, I mean, it's in a very strong uptrend, not only on the daily and weekly chart, but also on the monthly and the yearly chart. We are in a very strong market condition here for gold, which we saw this back just before the 2008 the 2008 market top. We saw gold, silver, and miners explode and rally for several months. and really rip to the upside. So I think we're coming into something similar to that. I've talked about that a few times over the last month or two, that this is starting to unfold, and we might see a very nice run where people start to pile into the precious metal space for several weeks or a couple of months, and generate some good potential here.
Chris underscores the differing preferences between gold and silver among consumers and traders. Large institutions and countries favor gold for its perceived stability, while silver tends to attract more volatile traders. January's buying also supports our expectation that 2024 will be another solid year of central bank gold demand. Central banks, particularly those in emerging markets, have shown since 2010 that they have a long-term strategy towards gold accumulation. Gold is typically seen as a stable investment with less price volatility. In contrast, silver exhibits more significant price fluctuations due to its dual role as an investment and industrial metal. Despite this volatility, it presents opportunities for investors to capitalize on market fluctuations. A recent banking stock sell-off has coincided with a notable surge in gold prices, reflecting an apparent inclination among investors to turn towards gold. According to Chris, this shift signifies a movement towards alternative assets driven by concerns about the stability of traditional dollars. Let's get back to the interview.
We're not seeing the leverage plays behind gold, which is silver in the miners. We're not, yeah, they've had a big bounce in the past couple of days, but really they're just an oversold bounce within a downtrend. They're struggling. They're not really participating yet. They might kick into an uptrend and get some traction, but based on my technicals and trend analysis, they're still trading in a downtrend and actually getting overbought here. So it's going to be interesting to see how they play out, because without them following suit, if people aren't moving into the leverage play behind it, then to me, it's not the real deal, the full big move that's coming. Typically, if we're going to see this big rally in precious metals, a lot of people should be piling into these leverage plays to make a fortune. Instead, they've been really moving in the opposite direction and selling shares. And now there's been a big kerfuffle, I think, with some scandals going on in the gold stock space, which may have added to some pressure, but really doesn't have a whole lot to do with I think the fact that they've been going down for a long time, and silver's just not getting any traction either. So say they're more so a different consumer. I think we're seeing gold get accumulated by large institutions, countries. Silver is definitely more volatile. I think it is a little bit of a different group of buyers or traders more so. Silver definitely lagging. Same with gold miners. I mean, they've all been struggling, and that's one of the reasons why I don't think we're starting the next multi-year rally in precious metals. I think this is going to be a leg higher, but we're going to go back and have a bigger pause later this year, simply because silver's not really joining in on this party, and we're not seeing gold miners. I think it was on Friday you were mentioning earlier, there's a big sell-off in one of the banking stocks going under. Of course, gold put in a big rally that same day, and it's continuing to rally today. So any sign of the banking system going down, people naturally want to flock to more or less physical metals. Get out of those digital bank accounts that can be drained and go bankrupt, and own something. So I think that could be a big movement towards the gold space, and also towards Bitcoin. People are getting away from the dollar, digital dollars and banks that can go under, and moving to physical or the crypto. So yeah, I think there's a flock to a different currency right now.
Today, the gold price holds above support and could be ready for another growth phase. Part of the reason for the growth spurt in the last few years has been the concern about an impending recession and the need for a haven asset. The price predictions for gold are generally optimistic, with many expert statements mentioning prices of $3,000 in the near to mid-term. How do you envision incorporating precious metals into your portfolio to capitalize on potential market opportunities and hedge against volatility? Share your thoughts in the comment section below. If you find this video informative, remember to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.